Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
We have an entire research team here to tell you about what stocks you need to watch out for as we head into trade today. So let's welcome all of them. Anuj, what are you looking at today?
So, Sonia, two stocks, of course. First is Tata Steel. My sense is that metals really could be the space to watch out for today. We have copper prices, of course, at new high. But this Tata Steel, of course, is different. It's a ferrous stock. But it's up 4% this month, 85% this year. I think clearly we are in the middle of an upcycle and there's a lot more room left in some of these stocks. The other one is Greaves Cotton. We normally don't talk about this, but for last 3 or 4 days, there's been quite a bit of delivery-based buying that I've seen in this stock. And yesterday as well, it had a brutal correction, but now up 12% this month. So let's see, some of these economy-facing stocks have done well of late.
Okay. Well, like a broken record, I can repeat again that bond yields will rise and therefore it could be negative for NBFCs. Actually, I think at lows they will be bought. Because this is really, to my reckoning, if the bond yields don't go beyond 7.3, 7.31, which I don't think they would, then, at the most it's a knee-jerk red on the screen for the NBFCs. But while I'm at it, let me also point out what Anuj had spoken about, the cut in small saving rates. It is only by 20 basis, but what it reiterates is that although inflation has started picking up, the government is still very clear that, you got to keep long-term small saving yields lower. The biggest competition for banks and for, as you pointed out, equity markets comes from this risk-free return of small savings. Since that has been cut, while you may regret it as a citizen, for the markets and for bank stocks in particular, this is a positive. So I would expect Nifty Bank actually to be in the green because of this.
Okay, that's very interesting. So there seems to be no other alternative except invest into the equity markets for good returns. But let's move on because very interesting block deals taking place in the Bajaj group stocks. Is this a precursor to some sort of family settlement? Nimesh Shah joins in to tell us more. Nimesh?
Hi, Sonia. So, when the blocks were happening yesterday, there was an indication that probably this is a way towards a family settlement. I guess you've got an off the record confirmation as well that finally this is basically to both for the control and for the wealth distribution within the Bajaj family. I was looking at the Bajaj family tree, Sonia, and the entire blocks which have happened are essentially happened in the other side of the Bajaj family group, which is the Ramkrishna Bajaj family group. So that includes Shekhar Bajaj, Madhur Bajaj and Neeraj Bajaj. So if you look at the block deals in Bajaj Auto, there was a block deal of close to 17 lakh shares, which was sold by Nirav Trust. In Bajaj Electricals, there was again Madhur Ramakrishna Bajaj, who's bought 7 lakh. Anand Bajaj has sold. Neelam Bajaj has sold. So, if you look at all the 4 stocks, Bajaj Auto, Bajaj Electrics, Bajaj Finserv, Bajaj Holding, where there were blocks yesterday, it essentially means that, there is a lot of inter-promoter transfer sale, which has happened in the Ramakrishna Bajaj family. It is separate from the Rahul Bajaj faction, but again, this has all been done to realign the stakes and to distribute the wealth within the Bajaj family. So, looks like the hangover of inter-promoter stake is now over. So, most of the stocks probably would be in green today. All the 4 stocks, Bajaj Auto, Bajaj Electrical, Bajaj Finserv and Bajaj Holding.
All right, so there should be a minor relief for the stocks and therefore in the green. Okay, Nigel, you're watching ADF Foods again because of some promoter share sale?
That's right, Lata. In fact, the stock has been a big outperformer, but I expect it to open in the red. Why? Because yesterday, towards the end of trade, in the final hour of trade, there was a large trade. Now, by the end of the day, we did realize that, in fact, a Cuba India fund, that's a fund that's bought close to around 2.5% stake, or they have bought roughly around 6 lakh shares. And the seller was a promoter entity. Now, the promoter entity has been classified as Priyanka Thakkar. And if you just take a look at the shareholding as of September 2017, her holding was nearly around 5%, and also, it's likely that in fact her husband holds nearly around 5.5%. So between both these two entities, they have close to around 10% stake. A promoter selling, not a good sign at all, but that's what's been happening over the last few quarters. In fact, we had the promoter on the channel, and they indicated that the selling was over. But in fact, this will be a bit of a niggle, and I expect the stock to open up in the red.
Okay, Nigel, thanks a lot for that. That's ADF Foods. Lata, Axis Bank, obviously, this whole issue about price-sensitive information being leaked into WhatsApp groups, and SEBI is getting tough on that. Do you expect Axis Bank to be in the red today, or do you think
I would at the most expect a sentiment negative because it's only a warning, and they have been asked to do an internal audit and come back to SEBI with a report. it's the onerous responsibility for Axis Bank is henceforth that they shouldn't allow it to recur. That will be the bigger responsibility. I think at the moment it's more like a warning that SEBI has given. And you and I and everybody else who have been getting WhatsApp messages know that this is not the only bank that is guilty or not the only company that's guilty. This is something seriously India Inc. has to contemplate. Probably, giving away the agenda papers to board members earlier, or is it chartered accountants who are, already involved in the preparation. These are all external members. And I want to point out one thing which we are missing out. Slippages number did not come out. See, that is not there in the P&L and that is not leaked. So the bank stuff is not leaking. Otherwise, slippage, P&L has, the GNP numbers. Those are the ones that are leaking.
Yeah, the P&Ls do get leaked. In fact, there's so many times we have the exact PDF.
Yeah, exactly. This is a responsibility for the entire India Inc. to, to clean up. And I mean, what kind of an inquiry can you do? WhatsApp messages cannot be tracked. Even if you take the phones of all those guys who were involved in the preparation of the report, you can track SMSs. But WhatsApp, the manner in which it is logged, you cannot be tracked. I mean, there are security, concerns over there, which cannot be breached. And therefore, I don't know, I wish India Inc. luck. This is a serious problem that everyone has to set right. But today, yes, sentiment negative for Axis. Okay,
sentiment negative for Axis. But Kolte Patil, mid-cap real estate stocks have done well, and Kolte could continue that?
Oh yes, Kolte Patil is up 300% this year. So it's done exceptionally well. And today I expect the stock to be in the green. They've actually entered into an agreement where KKR will be investing close to 200 crores into their venture Kolte Patil Iven townships. Remember, Kolte Patil and ICICI Ventures have gotten into an agreement where they're building that 400-acre, township in Hinjewadi, Pune, Life Republic as it is called. Now, KKR will fund almost 200 crores into this particular deal, and Kolte Patil will be using these funds to reduce their debt. Remember, they're sitting on about 450 crores of debt, so they'll also use it to meet some of their working capital needs, etc. The stock, as I said, has had a phenomenal run. It's now become almost a 3,000 crore market cap company, so I expect more green there.
Okay, I think it was Ashwini's pick at the start of the year, Kolte Patil, phenomenal move in mid-cap real estate. But Manisha, Vedanta, I mean, there's quite a bit of move in copper prices and a couple of other commodities as well.
Well, copper prices is something you can keep an eye on. 39% up this year, trading at a 4-year highs, and this is the best annual performance that we are seeing coming in since 2010. The latest triggers, of course, come in from China. The imports of copper have increased by 19% month on month. China also has completely halted production from the biggest copper producer there to keep a lid on the pollution there. And the other copper producers also have been told to halt production between 30 to 50%, and that tells you that we are looking at some supply concerns here. Also, a synchronized global growth estimates for 2018, an expectation that the US will now move on to infra spending after the corporate tax has been dealt with is something that tells you that while the demand will be on the higher side, the supplies wouldn't be anywhere near matching that. We already have seen a deficit of copper supplies in 2017, and that is expected to carry on in 2018. So very strong going as we head into the new year.
Okay, so keep Vedanta and Hindalco on your radar. Thank you very much, Manisha. Well, Pharma again, Ekta, why Sun?
Well, Sun Pharmaceuticals was up around 5 to 6% top Nifty gainer yesterday. Goldman Sachs wrote on it, they have a buy with a target price of 600 rupees, referring to OTX 101, that dry eye disease which Sun Pharma received an NDA, has filed for an NDA application in the US for. Goldman Sachs is positive on that. According to them, the efficacy, so basically that means the, the effectiveness of this particular drug by Sun is earlier than Allergan's particular dry eye disease currently on the market. They expect the new drug approval over the next 12 months and they expect commercialization by FY20. But the one key risk would be potential generic companies entering the market for the current dry eye disease, Reddys, which is already in the market. So that could be competition. But this particular drug that Sun has is looking good according to them.
Okay, Ekta, thanks for that. Big underperformer this year. Sun Pharma down about 10%. But yes, it was the big star yesterday.
Nothing compared to Lupin. Lupin is 40% underperform. Sorry.
Talking about stars, Nigel's going to tell us why he's watching Star Cement this morning. Nigel?
Well, with regard to Star Cement, you normally look at the subsidy that's outstanding and how much of it they'll receive. Now, yesterday in a disclosure to the BSE, What the company is saying is that they've received around 160 crores of subsidy that was outstanding. That's the capital investment subsidy from the government of India. This is a positive because they're saying they're going to be repaying their debt with this amount. The total debt, the last number that we have is around 650 crores. So this 150 crores will be a good reduction. But the management had joined us in November itself, and at that point of time they said in the first quarter they received around 60 crores. Second quarter they didn't receive any subsidy. But in the second half of the year, they were expecting to receive around 150 crores in terms of that subsidy. And that's precisely what's happened. So the stock should open up in the green.
Okay, thank you very much for that. Back to you, Ekta. Granules?
Well, they've got US approval for cetirizine, which is basically an anti-allergy drug, and it's very commonly used. So so it's not really going to make money from the drug because it's already quite generic, or not make too much money rather. But the positive for Granules is that this is an indication that the formulation business of the company for painkillers globally. So now with this particular approval, it's an indication that the ANDA business or the formulation business of the company is picking up in the US.
I have used cetirizine 30 years ago, I can assure you that. So roughly when I was born. Okay,
okay. Let's move on. Abhishek, State Bank of India.
Well, Anu, State Bank of India is looking to raise capital to the tune of 8,000 crore via masala bonds till March 2018. So what this does in terms of mathematics for State Bank of India is it improves the Tier 1 ratio to above 40 basis point, by above 40 basis point. And on the book value, it increases by 3.5% to 277. Remember that as this is a bond issuance, there will be no equity dilution. So the increase in book value may be seen positive in market today. Back to you.
Okay. It could be masala bonds. It need not necessarily be, but it is an additional Tier 1 bond. Thank you very much, Abhishek. Ekta, again, more pharma companies. Why Dr. Reddys and Oro?
Well, I think the USFDs come back from holiday, so a lot of approvals coming through. But nonetheless, for Macquarie, they've written on Dr. Reddys. There was an Aurobindo approval which came in for one of the drugs that Dr. Reddy's sells as well, which is for deep vein thrombosis, which is called Erixtra generic. So what this means is that it would be a positive for Aurobindo because approvals are picking up for them, but at the same time negative for Dr. Reddy simply because it would shave off around $10 to $15 million annually from their sales of this particular drug. Separately, Aurobindo has got an approval for an anti-anxiety drug from the USFDA and Dr. Reddy's for a genetic blood disorder drug. So that will probably negate the sentiment on Dr. Reddy's. And for Aurobindo, I expect the stock to be in the green.
Okay, anti-anxiety, blood disorders. Hopefully, we'll never have to use any of these drugs. But thanks, guys, for joining us and talking about all of these stocks. Here's a quick recap of our top stocks to watch. Expected to gain today: Tata Steel, Greaves Cotton, Nifty Bank, the Nifty PSU Bank Index, Vedanta, Bajaj Auto, Bajaj Electricals, Bajaj Finserv, the entire Bajaj group basically. Kolte Patil, positive news for there. Sun Pharma, Granules, Aurobindo Pharma, SBI and Star Cement. While stocks expected to be under pressure, HDFC, Indiabulls Housing Finance, L&T Finance, M&M Finance, Axis Bank, ADF Foods and Dr. Reddys.
Well, quite a bit of bullishness as far as the Asian screen is concerned, and the SGX Nifty, wants you to believe that this whole macro worry is not a worry at all for the market. In fact, 10,527 is what we have on the SGX Nifty, and considering that that's indicating a futures rate and today's expiry, so that's almost the spot rate as well, which would mean that we would pretty much wipe out yesterday's entire losses at open itself. Ashwini Gujarat, Sudarshan Sukhani and Mitesh Thakkar now join us. Good morning, gentlemen. Ashwini, if we have this kind of gap up 35-40 points and we wipe out yesterday's losses, in that case, is the short trade negative?
Well, good morning, and you have to come in with certain probabilities, and this gap up basically means that we are going to open at the turnaround zone. Now, either we'll turn around and go to the downside, or we will go through this 10,530 resistance and start making fresh highs. So my sense is that the right way to play this is to play it like a retest of the highs rather than looking at this as a big fresh positive. My overall take on the numbers, etc., this FISC, obviously the government will not borrow 70,000 crores and crash the market. But, it's never often one-off. And things tend to get worse progressively, given that commodity prices, etc., are moving up. So that way I'm interested to see what is the view the market takes here. And, the first trade is that if we open around these resistances, we look for weakness to short.
Okay, so you look to short around 10,530, is it?
Yeah, thereabouts.
Okay.
Similarly, I'm more interested on the bank Nifty. If we get, say, 25,580, 600 at some point, that would be used to go short, because it's at higher levels that you have to see, whether the bigger players are lightening positions on financials or not. Because the kind of, trend that seems to be playing out is that this 2-year financials rally is kind of taking a backseat, and IT, pharma, metal, etc., those global plays could do a bit better, and these guys could take a back seat.
Okay. I take your point. Even I would wait very eagerly to see how the market interprets this, because as Ashwini points out, it is coming along with other macro threatening factors like rise in commodity prices.
Okay, let's get Sudarshan Sukhani and Mitesh Thakkar into the discussion as well. Gentlemen, morning to both of you. Sudarshan, come in on this. Does it really matter? I mean, 15,000, 10,000 crores here and there. Does it matter to the market as a whole? And even if we do see a dip, do you think it could be lapped up very quickly?
Well, I think the market is willing to go higher, and that doesn't mean it will go higher today. But to answer your question, the numbers, the deficits, the loans, I don't think that it matters to the market. This is a bull market. It accepts all setbacks in between, and that's part of the process. So the Nifty in the intermediate term is likely to see, or maybe in 2018, we'll see much higher levels, and all of this news will simply be absorbed. For today, yesterday's market action still enabled us to hold our long positions, because our stops were at a support level of 450. And the Nifty did not come to 450, fortunately, or whatever. Today the trade is the same. Stay long in the Nifty or buy the Nifty at current levels, which are stop at 450. Like yesterday, I have no opinions on the Nifty Bank, because the Nifty Bank is now either dragging the Nifty down or not giving a pattern. Fortunately for the index, the primary index, the Nifty, we have so many other companies which are non-banking companies, Reliance, even ITC, which is giving signs of life, ONGC, GAIL, and the entire IT pack. So these could push the Nifty, while the bank Nifty could be laid back. Stay long with a stop at 450.
Stay long with a stop loss at 10,450 on the Nifty. That's Sudarshan's call. So let's see. Ashwini would want to try a short trade at the open. But of course, the time horizons are completely different here. Mitesh, good morning. What about you? How would you trade the index?
Good morning, Anuj. So I think the Nifty hasn't yet broken the immediate supports of 10,480, 450, and I think I agree with Sudarshan on that. But my worry is the bank Nifty, which has started to slip below the 25,500, 550 mark. In fact, we did recommend some kind of short positions yesterday. I think 25,550 is not being breached in the morning, and we see some weakness coming in again. I think Bank Nifty is the primary instrument to possibly trade on the short side. And if we start breaking 10,450 on the Nifty, then I would be more worried on the Nifty positions as well as the stock positions. So for the timing, 10,450, 480 I think is a support zone that's to be watched out for. But the Bank Nifty, if it in the early morning fails to sustain about 25,550, that will call for shorting.
Okay, shorting at 550. All right. Now let's get to the stocks. Ashwini, what would you trade with?
Just one more point. I would like to see how quickly we get back to yesterday's low, at least on the Bank Nifty. Okay. If we start making those large bars again, that means that information has not been taken very positively. So the bounce from the lows is very critical. If it's a 80, 100 point type of bounce, half of what we lost, then the signs are that probably it could restart a downside. So that's very important to check whether the good news gets responded to very strongly. Okay. As far as individual stocks are concerned, UBL is a buy with a stop of 1,050, target of 1120. DV's Lab is a buy with a stop of 1100, target of 1165. Fresh expansion is starting here, hence even post yesterday's strong move, more upside can be expected. IndusInd Bank is a sell with a stop of 1670, target of 1600. Canara Bank is a sell with a stop of 372, target of 358. And Jubilant Food is a sell with a stop of 1750, target of 1675. Now the way to take shorts is once the market starts to tumble, that is when you will take those short positions, not necessarily early in the morning.
Okay. Ashwini, actually
incidentally, there is a minor positive for banks in the sense that the cut in small savings reduces competition for them. But I think all our experts are going with sells on that.
Yes, the Bank Nifty has underperformed. Ashwini, of course, has 3 sells and 2 buys. And is trying to explain the nitty-gritties of how you should sell as well. UBL actually is interesting because it's of course New Year's Eve as well in a couple of days, so maybe some of these liquor stocks
You're
could
really
do
looking
well.
forward to that, right?
Not anymore, Sonia. Those days are gone. But anyway, let's move on. Sudarshan, good morning. What are you trading?
Well, I was very fascinated by your thoughts that New Year's Eve indeed, huh? And that pushes the stock price. That will be some New Year's Eve. Okay. Well, it's primarily buying. Tech Mahindra is a buy. It has already come out of its bear market. It keeps on coming in my buy list. You know, the IT index itself broke out of a 3-month congestion on the upside. And that tells us, irrespective of fundamentals, the market likes IT plays. So Tech Mahindra is a buying opportunity. Z was at lifetime highs at the closing level. All stocks and especially blue chips which are at lifetime highs should be bought into. That's a buy. GAIL has been rallying. Yesterday had a down day. That down day was probably because of some different reasons in the afternoon. It is possible that the rally could start again. So GAIL is a buy. Tata Chemicals had another consolidation of 3 months after that big rally. That consolidation is breaking on the upside. That's a buying opportunity. All of these buying opportunities could also be not just swing trades. You could build positions in anticipation of the budget session that's going to come in. Finally, Bank of India is a sell, part of the PSU bank lot, which I don't like.
Okay, so that's the list coming in from Sudarshan. Mitesh, what about your list for the day? And since we have just 2 more days left for the new year, give us one stock for 2018 that would top your list.
Yeah, sure. So I think, yesterday I was leaning more towards pharma side. Today I've got 2 IT stocks in the buy list. So for the day I have on the IT side, Tech Mahindra, which has given good intraday setup, buy with a stop at 495, look for targets of 520. Wipro has finally managed to close above 305 levels. So that's a consolidation breakout. That's a buy with a stop at 219.5. I suspect for first targets of 320. 2 more buy calls, Max Financial Services, buy with a stop at 589. Look for targets of 635, and Apollo Hospital, that is a conditional buy. It's consolidating, but I suspect it could break on the upside. So once it manages to go past 1208, buy with a stop at 1185 for targets of 1250, and one sell call, that's Mahanagar Gas. The intraday charts are negative, so sell with a stop at 1126 for targets of 1070. And one stock, which I would possibly recommend for next few months or quarters, and with a disclaimer that I personally own the stock, is Alembic Limited, 55-56 rupees stock. I think it's just giving signals of starting a multi-month uptrend, which could see the stock possibly go to 100 plus levels.
Ooh, okay. Thank you very much, gentlemen. We'll of course come back to you for lots more advice. But continuing from where Mitesh left off, in terms of the big stocks to watch out in 2018. CNBC-TV18's Market Wallas, SP Tulsian, Prakash Diwan, Ambarish Baligar, Mehraboon Irani gathered yesterday to give their top bets for the new year. We have indicated some of the bets earlier today. Here's the third set of bets that came from our Market Wallas.
Very low equity at about maybe 70 crore with a face value of 10 rupees, and market capitalization and or the EV is quite low, seen at about 7,600 crore as market cap and EV at 9,100 crore. And that translates into cement per ton capacity at about $110. But the best part is that company has already taken up the capacity expansion to 14 million ton, and that should get completed in maybe next 12 months or so. Maybe for FY19, I won't be surprised to see the EPS moving to about 78 to 82 rupees, which is likely to be at about 58 to 60 for FY18. So taking all this into consideration, share is likely to give a level of about 1370 in 2018, which is now ruling at sub 1100 rupees.
My sense is Jet has started doing a lot of things in terms of cutting down costs. The efficiencies would change dramatically. And if you have a KLM or an Air France or somebody bailing them out on the balance sheet, so apart from P&L, the balance sheet will also start getting repaired quite well. And if you notice, quietly there's been a reconstitution of the board itself. So from a lot of people who are just iconic names and generalists sitting on the board, they've actually got people with experience from aviation and similar sectors. And that's driving things very rapidly. So if Jet transforms itself, it will get rewarded very, very easily. I wouldn't be surprised if it goes to that 1100 kind of a mark as well. So I know it's already moved quite well, but it will be volatile. It's not going to be a smooth ride, but it will reward if people patiently hold on to it, especially this year.
Mr. Sheshadri has joined in, who has years of experience with Citi, and he's expected to change the face of the bank. And now with the clear focus again back on SME and retail, I actually expect this bank to start doing well, possibly after a gap of either 3 or 4 quarters. There has been infusion of funds through rights. So I expect the bank to maintain those NIMs currently, and expect that to move up in FY 19 and 20, because of which you'll have the EPS moving up. So I think the downside at these levels is very minimal. I think that's what one should look at whenever you're buying stocks at Sensex 34,000. So upside I'm looking at is about 160 in the next 9 to 12 months.
Edelweiss is not the small player in the capital market segment which it was years ago. It has evolved itself. It's gone into lending business, started with wholesale lending, now into retail lending, where it is meeting with a lot of traction. Earnings could show an exponential growth over the next 2-3 years. It's difficult to quantify it. Current year should be a 10 rupees EPS, which should possibly become maybe even a 20 rupees in the next 2 years. I don't rule it out. So at 290 rupees, 100 becomes 290. Should I buy into it? The answer is, if it's going to become 450, why should I possibly bother of a 230, 240, 250 coming again? I would put it that way. It's very difficult to time stocks like Edelweiss, which is showing exponential growth. So I will stick to it and recommend it as one of the best picks of mine for 2018 also.
Well, let's shift focus to one sector which, of course, never falls from the limelight, cement sector. News reports have suggested that some cement companies may have cut prices, especially in the Mumbai region. Manish Raj of Dolat Capital has joined us on the phone line. Manish, can you first tell us whether you have verified any of this? Have there been price cuts, and if yes, where?
What we have verified so far is the price cut has been in the Mumbai region. Other than that, we have not been able to confirm whether the price cut has happened pan-India or not.
But is that a surprise, and will that make you rethink your view on any cement stock?
No, as of now, we will not be rethinking the view. It's only just that this quarter exit run rate will come down lower. So that is the concern, because the cost has been stiff.
Okay. Manish, hi, good morning. We'll come back to this price cut issue in a bit, but I also wanted your thoughts on, a lot of the acquisition opportunities that are currently underway. I mean, the continued down cycle in the cement market is giving rise to more acquisition candidates. We heard about the possibility of Binani's assets out for bidding. Then there are talks also of Murli Industries likely to be acquired by Dalmia. Any of these acquisition hopefuls that you track?
No, we are not tracking any of these companies, but we are tracking the companies who are interested in them.
Sure.
So UltraTech is one of the companies that we track, and we believe that UltraTech is very much interested in acquiring these assets.
Okay, so Manish, good morning. So coming back to the point on pricing, do you think if this leads to some correction, would it be a buying opportunity? The stocks have done well.
Definitely, if the stock price is correct by another 2-3% from here on, there will be buying opportunities emerging.
Okay. So what is your call on UltraTech now? You said that they would be interested in acquiring assets. So what's the target price you're looking at, etc.?
We are looking at 4,675 as our target price on UltraTech.
All right. Well, if there is a price cut, what may be the reason? Is demand so poor?
Demand has been coming in small bursts. So till 15th of December, we were hearing that demand was weak. And after that, we heard that the demand has improved. But suddenly, this price cut gives us jitters about whether the demand recovery, which we saw for the last 10 days, was able to take a blown view or not.
Okay. And this demand burst that you are speaking about, is the fall only in Mumbai, or what is your assessment of demand elsewhere in the country?
Elsewhere, these are state-specific demands, like eastern part of the country is doing well. North, there are pockets which are doing well, like NCR, whereas Maharashtra was doing well. Andhra and Telangana are doing well. Karnataka is showing signs of recovery. Tamil Nadu, there has not been much of a growth at this point of time. Karnataka remains on the downside.
Okay.
Kerala remains on the downside.
Okay.
So South is not helping.
Yeah. Okay. All right, Manish. Thanks a lot for your time today. That's the view on cement stocks. F&O expiry today. Hemant Thakral is with us from Aditya Birla Money. Hemant, good morning. Is there a Nifty strategy on expiry day?
See, Anuj, what we are expecting is that Nifty expiry to be between that 10,500 to 550 band. We expect it to move up, so we are positive today. And any dip, I would actually like to buy 10,500 call, because we see it testing at least once 70-75 zone during the day. So we will be trading with it with a positive bias, and 10,480 we have kept as stop loss. So any selling below 10,480, this target will change. But the way the options data is getting placed up, I feel that 10,500 to 550 and towards the higher side, the expiry should come in. And we are very positive in the January series also, because the way the rollovers are happening, the way the options base is changing, we are expecting 10,700 to be tested in at least by 10th of January.
Oh. Okay, rollovers, can you give us a little more color? How does it compare with previous month's rollover?
See, rollovers, we feel they are on a very healthy side, especially Nifty rollovers are showing signs of encouragement. And then there are a lot of sectors which have started showing good rollovers, like metals, auto we are positive, metals we are positive. Then on the pharma, IT, so these are sectors which are showing good rollovers. The only thing which is slightly worrisome is Bank Nifty. That's been the slightly drag point, and that still continues to show rollovers in individual heavyweights also, where there is a cause of concern. So that is the only point where we are still on this opinion that Bank Nifty may continue to trade in a range between 25,200, which we expected to hold to 25,900. So that is the one area where we are slightly worried. But apart from that, there are a lot of new sectors which have come up, like I just mentioned, IT, pharma, metals are doing very good on rollover front, and as well as auto. So banking is still a concern, but we don't expect Bank Nifty to dip below 25,200.
So in the pharma space, Sun Pharma was the big mover yesterday, Hemant. You have a trade there, and anything else from the heavyweights that you like?
See, two sectors stocks I'll recommend today. One is metals. In that we have chosen Vedanta. 61% positions have been rolled till yesterday, and if you see its average is T-1 is 45. So we are expecting it to cross 80% rollovers, which Vedanta has not done from last 6 months. And importantly, Vedanta is closed yesterday above 320, which was acting as a slightly stiff resistance on technical grounds. So we feel that one should keep a stop loss of 322. We expect a target of 336 as the first target. Second sector, as I just mentioned, pharma. We have seen very good rollovers happening. In fact, Sun Pharma has done 76%. So we expect it to do like last month. It had done 90. We are expecting it to cross 90-91% rollovers. But this time the rollovers are happening when Sun Pharma has given a clear breakout on charts yesterday. So we expect this momentum to continue. First target should be 597-600 zone, and we'll keep a stop loss of 565. So we are recommending two trades, one in Vedanta and one in Sun Pharma.
Fair point. Thank you very much, Hemant, for joining us with your strategies. And if we don't speak with you, have a great 2018 as well.